Hey everybody, so today what we're going to be doing is going over the structuring of your policy, and this can apply to, I'm going to tailor it more towards life insurance, but it also applies to any kind of policy that you have and I'm going to throw in some business aspects too. So be sure to stay tuned, hit the like button, subscribe to my channel, and we'll get started here. So here we go. So what we're going to be going over is structuring your policy. Now, I personally, myself, am a bit of an outdoors guy. I like going outdoors, and I also am a knife fan. Okay, so I'm going to be making an analogy to knives. All right, so if you want to cut a steak, you're not going to use a butter knife. If you are going to be spreading butter, you don't want a steak knife. But there are many types of policies out there that can be rearranged and arranged different ways to accomplish different purposes. So you need to be thinking with that when you're looking at your insurance coverage. Now, I also cover that with business insurance, because you have some policies, you have like a general liability. Okay? Or you can have a professional liability. And each of these is a different knife in your toolkit that serves a different purpose. Okay? So that's the bit of the business aspect, but this is going to be more focused on life insurance. Okay, so let's say, for example, what can a life insurance policy do for you? Okay? So it can, first and foremost, provides death benefit. Okay? So this is just what most people think about insurance. It's when you die, your family gets money. Number two, you can have cash value. Okay? And this is actually money that grows in the life insurance policy, and you can utilize it for different things. Okay, so let's say, what would be an example of that? If you are a person who makes too much money to have certain retirement accounts, you can actually use your life insurance to do that. Okay, you also can structure it in such a way that the cash value actually gets to a point where it pays for the premiums, which means you have no actual premium that you have to pay, or no cost to you. I'll go over a quick example of that I actually ran for a client earlier today. The other thing is you can utilize that cash value to help fund your long-term care needs. Okay, that's something that most people don't think about. All right, so the third option is the death benefit. You have the cash value, and then you have accelerated benefits. And these are while alive. Okay? So many people think you have to die to use life insurance. You actually don't. You can use it while you're alive. Many life insurance companies have what are called chronic illness or terminal illness stipulations in them that say if you meet certain criteria, a certain portion of your insurance can be paid to you while you're alive to help for your care. So that's something to think with. So these are all considerations. So what I'm going to do is I'm going to go over an example of how cash value life insurance works and how you can think about it. So you have money that you are paying in, okay? Now, when you pay into the life insurance company, okay, your money goes two places. It goes over here to the cash value, and it goes over here to the cost. Okay, because your policy has to be charged a fee. Okay, And this percentage of growth, sometimes people will talk, like I know Dave Ramsey goes into how of a bad investment life insurance is because of the cash value. That's fundamentally wrong, just because, yes, it is a bad investment because it's not an investment. Like, there's no part of this that is investing money. Your money is not exposed to risk. Sure, your gains are probably not going to be as high as you would get in the stock market, but you also don't have, it's a bit of a safer place to put your money, and you can still have access to it, okay? So now, and then certain companies, and specifically I will go into mutual companies, and you've all heard of these. These are your Penn Mutual, your Mass Mutual, Illinois Mutual, all of these types of policies. They have the cash value creates a dividend, because as a mutual company, you are an owner of that portion of the company, okay? So your dividend actually goes into the cash value on a circular basis, and it builds the cash value accelerated, or at an accelerated rate, okay? So now, what can you do with your cash value in your life insurance policy? You can do multiple things, okay? You can withdraw it. You can take a loan. You can use it to buy more insurance. Or you can have it reduce premium. And that equals less cost. Okay? So these are just some of the things. There are other things that it can do, but I want to try to keep this brief. Okay? The bottom line is this. There's multiple things that you can use it for. There's multiple benefits that are had to it. The dumbest thing is to not have any, and you need to keep that in mind. Okay? So if you guys found some value from this, be sure to hit the like button, subscribe to my channel. I very much appreciate it. And I hope you guys all the greatest financial success and freedom. Be great.